Hi there, good afternoon. We're joining you from the SBI Live studio and you're watching Closing Trades on ET Now. Just taking stock of where the market is right now and looking very cheerful today, 24,878. So we're inching closer to that 24,900 mark, almost at the day's high. About a 0.4% uptick is what we're seeing on the Nifty right now. Other than that too, sensex too seeing similar gains, about 0.5% higher. Nifty Bank has recovered from the day's low, a 0.1% uptick coming in, but still largely underperforming what the benchmarks are doing in today's trade. But nonetheless, Nifty Bank also recovery coming in from the day's low. What's done well today is also the broader end of the market, because at market open they were ready to tip over to the red, so slight recovery on that front. Not much happening over there. 0.1% uptick coming in on the mid cap, 0.3% uptick coming in on the small cap space as well. Let's take a look at what's happening sectorally right now. It's IT that continues its dominance in today's market, so 2.3% uptick coming in for the IT index, of course led by Infosys on the back of their share buyback meeting on the 11th. So about 5% uptick coming in for Infosys right now, followed by Wipro, TechM, Persistent, Emphasis, LTI, Mindtree. So the overall IT pack is in the green. That followed by Nifty Pharma, FMCG, Media, Bank, everything else on the flat line. You have Metal, Auto absolutely flat. What's mildly in the red right now is PSU Banks, Energy and Realty. So that is what the market construct is looking like right now. Let's decode this and a little bit more on the fundamentals. We have Anshul Sehgal, founder at Sehgal Capital, joining us on the show. And Anshul, hi, good afternoon, and thanks so much for your time today. First up, give us a general read-through of the market today and also what we've been seeing in the near term in the couple of weeks gone by. Because every time we try and come closer to this 24,800, 25,000 mark, we recede back. Today, for some reason, we're being able to hold on to those gains. Fundamentally, do you think the tide is turning? Confidence is once again coming back into the markets? Are there any early signs of that?
Hey, good morning. Pleasure to be speaking with you. Good afternoon. Sorry. Yes, you're right. It is a confusing situation in the markets where every time the markets start to rally, they get pulled back for one reason or the other. The recent issues are surrounding tariffs and also, as a result, FII selling. But if you look at the structure of the markets, it's quite evident that this market is taking cues from growth patterns. So segments of the market where growth is looking, consistent and there is high probability of growth, those segments have done actually quite well, even in a volatile market scenario. And this is somewhat like the Indian philosophy of Samudra Manthan, or churning of the oceans, where on the one hand you have the bad guys pulling on their side, and on the other hand you have the good guys who want the markets to go up. And sometimes one side pulls harder than the other side, but by and large it is the good guys who are going to win, and this is a market which in the long term is going to actually do quite well. We are poised for, and if you speak with companies also on the ground, it's quite evident that these companies, their body language seems to suggest, and also their investment patterns, they seem to suggest that they are building their businesses for the next 3, 5, 10 years, and they see tremendous value in this market over that phase. In the short term, of course, there are issues, but it is in this market that if you build a good portfolio, strong businesses with long-term growth patterns, it's unlikely that you will go wrong.
That analogy, Anshul, coming just back to that, the churn that we're talking about is not only between the bulls and the bears right now, but also amid the sectors that we're seeing in the market. We also have Kunal Bothra, who's joined us in the studio. And Kunal, good afternoon. Before we come to you, just want to take a follow-up with Anshul. Anshul, in terms of the sector churn too that we've seen, right? Autos have been consistent, but IT has its on and off days. What is your take on the kind of churn that we're seeing? And where among sectors are you seeing some confidence or some stability right now?
As regards the IT sector, you have to see the growth versus valuation context. Now, many of these names still trade at somewhere close to 25 to 35 times price to earnings 1 year forward. Of course, there are some which, because of time correction, have come down, and also price correction, they've actually come down to between 20 and 25 times price to earnings. But by and large, this market is between 25 and 35 times. For growth, which is in the range of 0 to 5%, and much of that growth is dependent on what's going to happen in the US economy. If that economy goes into a recession, of course, there is downside to growth estimates. But if that market holds up and is resilient, some upsides in growth numbers may be evident going forward. In this sort of a balance, we would be on the sidelines for the moment because really this anemic growth doesn't inspire any confidence unless we see some patterns or some signals of growth picking up in this space. For these valuations, I don't think we would be buyers for absolute returns at this time. Of course, on the downside, they may protect you on the downside because these are somewhat defensive sectors. But not material upside is what we see here. On the other hand, just as an instance, over the last weekend, I was meeting some companies in Delhi, and I met a defense company, I met a renewable energy company, and the kind of market size that and the growth that their markets are seeing, it does look like that space is in for a very good time, at least for the next 3 to 5 years. And in some pockets, valuations are not really out of whack. Of course, in other pockets, valuations are very expensive, but there are pockets where you find reasonable opportunity. So I would say that defense, renewable energy, that is one space because of the growth pattern and the overall market size that one should consider looking at. Aside from that, banking, finance, capital goods, and manufacturing, of course, look quite interesting at the moment.
That's the take coming in. And Kunal, also weigh in and give us your sense of what the market reading has been today. Because, we are at the day's highest point right now, and it looks like we might inch towards that 24,900 mark towards close. About an hour left of trade. Where do you see us headed for the remaining time of this trading session?
See, I think today's day is more of a balance between positives as well as negatives for the markets because, on one hand, it's the fresh expiry for the for the Nifty. So I think in that sense, we were expecting the markets to be a little bit more volatile. But then this time around, it's good to see that the markets are not volatile, at least as of now, except for the last, I think, 10-15 minutes where the Bank Nifty corrected by 150 points. We've been more or less flat for the benchmark indices throughout the trading day. The other positive for the markets today has been a balance of fresh sectors because over the last many days and weeks we've seen the IT index being one of the more beleaguered sectors underperforming. Today, I think on the back of news flow for Infosys, you've seen many of the IT stocks, TechM, TCS, Wipro, etc., showing signs of strength. So that indicates that we may probably be looking at at least a stable move for many of these IT stocks going forward. To balance that out, you've seen the Bank Nifty more or less flattish to just about sideways throughout the day so far. So I would believe that it's more of a balancing move across sectors. The Nifty is showing a follow-through up move. We are coming close to that 24,900 mark. I think it's a matter of time that we scale past about those levels because once the sector starts to show signs of strength, it's eventually a matter of time that the indices will also get into a breakout mode pretty quickly. So optimistic on the index over the near term. In case if there is any kind of a volatility like what we saw yesterday, a 200-point kind of a sudden drop on the benchmark indices, specifically on the Bank Nifty, if it happens on intraday basis, that should be taken as a good buying opportunity.
Buy on dips and optimism is what Kunal is spotting for the market in the near term. But Kunal, you just spoke about IT, the top gaining sector. Let's flip sides and talk about the top losing sector today, and that's Nifty Realty. And it has been quite subdued for quite some time now. So stocks like DLF, Soba, Godrej Properties, they're not doing all that well. What's your take over here? Does this look like an attractive buy on dip sector on the charts right now?
Not as of now, staying, but I think there'll be a point. So, I was making this point yesterday also that IT and real estate are the two sectors which have been huge underperformers. Now, there comes a point where there is a change of stance from traders, which happens on the back of news flow. You'll have to wait out for that confirmation. For individual sectors, for IT, we saw the news yesterday, and that's playing positive. For real estate also, I think we may probably have to wait out for a point where many of these real estate stocks get into a cohesive breakout. Many of these stocks, for example, I was looking at the charts for Prestige. That stock has corrected more than 15%. DLF, I think from those highs of 840, 850 levels, has corrected almost 10 to 15%. So many of the real estate stocks have corrected 10, 15%, quite sharply in the last few weeks. So there has to be a point where these stocks come back into an oversold territory. As of now, unfortunately, those points have not yet reached on the charts for many of the real estate names, and that I believe could probably be lingering on into the sectors over the near term. So would not want to venture out into a bottom formation or a contra buy at current levels for real estate stocks, but then wait out for either the stocks to come back into an oversold territory or at least show some signs of a positive news flow, which could form a bottom for them.
Okay, so that's the take on select counters from the real estate space and the sectoral view overall from Kunal. But on that note, we'll slip into a very short break and we'll talk more about market.
Will happen in the revenue side because of the cuts that will be amply compensated by the boost in demand itself.
I think if you see this entire activity, that is going to generate a lot of consumer demands in the economy. I think retail loans, definitely it is going to pick up.
I think it's a wonderful move. I think it's also wrong to believe that in the long term there will be loss to revenue. There'll actually be a gain in revenue.
This will enable a lot more people to buy. The government is sending a message that these are very important products. That is why we have made GST on these products zero.
18% GST going down to zero has a huge difference.
And as an industry, I do feel we will step up to make sure that the full benefit of exemption is passed on.
It is always there when the downstream government will grow, whole value chain will grow.
And the apparel, which used to be 5 and 12, has moved from 5 to 18%, and the demand will go on for that as well.
Hi there, welcome back to Closing Trades, and the market is holding on. 24,858 took a slight blip from the day's high, but nothing to complain about, nothing to worry about either. Let's move on to an exclusive story then, and sources tell ET now that Adani Realty, Lodha Developers and Hiranandani Developers are amongst the top interested players for Rail Land Development Authority's 3 prime railway land parcels in Mumbai. My colleague Samir is joining us with more details on who's the top contender here. Samir.
Railways has floated the tender for the development of 3 land parcels which are there in the prime location in Mumbai for its development. RLDA, the Rail Land Development Authority, which is the nodal department, has floated the e-tender inviting the players to come and they can bid for these 3 land parcels for the same. The first pre-bid meeting was conducted on 9th of September. But we are picking up from our sources that top-notch realty players, whether it be Adani Realty, Lodha Developers, Rahija Developers, even Hiranandani Developers, they have shown keen interest. In addition to this, there are a number of other players also, those who are showing interest for these prime land parcels. When it comes to Mahalakshmi land parcel, the area is more than 10,000 square meters. For Bandra East, it is more than 45,000 square meter, and for Parel, it is more than 23,000 square meter. All these 3 land parcels they are situated at the prime location, which can fetch good revenue, not just for railways, but also for the real estate player as well. Railway has floated that these can be developed on a long-term lease basis for 99 years, and both can be developed in the sense that commercial and the residential development option is there. In addition to this, Railway understand that this will also help Mumbai real estate sector to gain from the current position as well. So first pre-bid meeting has been conducted. The tender opening date for Mahalakshmi, it is 14th of October. Similarly, for the other 3 land parcel, it is November 3rd and November 14th. With this, government has invited the players so that they can come up with their queries that can be resolved, and then they can bid for these 3 prime land parcels. And the reserved price that has been set is above than rupees 8,000 crore that has been set for these 3 land parcels.
Okay, so that's the take coming in, and that's the exclusive story that my colleague Samir has brought us. Now, 2 aspects to this story, railway and real estate. We've just spoken about real estate, so Anshul, let's touch upon the railway bit, And this pack overall has been seeing mixed moves coming in. Just this morning, we've had news flow on RailTel, wherein they've bagged an order for worth more than 700 crore rupees. What's your take on this sector? Because they've also seen its fair share of volatility, some of the stocks in this pack.
This pack has actually seen a lot of interest over the last 4 or 5 years. I recall that when the current government came into power, they started talking about railways 2014 onwards. And in fact, somewhere down the line, the rail budget was also amalgamated with the general budget of the country. Now, these were signals that there is going to be transformation in railways. But investor apathy kind of continued all the way till around 2021. Just as an instance, sometime around 2019, we bought into in our portfolios a company called RVNL. And at that time, it used to, the 20 rupees stock used to have 5 rupees or 4 rupees EPS, which means it used to trade at 5 times price to earnings. And it had as much as a 7 to 8% dividend yield. And the growth patterns for this company over the next few years were significant because they had 7 years revenues already there in the order book. Now, fast forward to 2023, 24, and the stock went from 20 bucks to 600 bucks. Much of that was because of multiple expansion and all the excitement that kind of took over around the railway space overall. Now, some of these stocks have corrected a little bit, but still, most of them have they're trading at full valuations, and there is very little room for upside on valuations from here. Lies, but by and large, this space has seen the value unlocking over the period of 21 to 24. So we will be on the sidelines in this space by and large, but we will look for that odd opportunity where we think that value still resides in that opportunity and multiples have room for expansion. But that is only because valuations are expensive. We believe that this is a very interesting space. Growth in this space will be very strong, and the establishment's focus on this space will lead to transformation over the next 5 to 7 years in this space as well.
Kunal, today, of course, it's Titagar, right, which is seeing a good breakout, 4% higher. But analyze the entire pool. Where do you find the trading opportunity?
So Titagar, I think, is a prime stock over here. It's a typically low beta stock as compared to a very high beta nature of the entire real estate pack. And the stock showing signs of leadership, I think, is a very good. Yeah,
you said real estate pack.
Oh, sorry. So, so the stock showing signs of leadership, I think, is a very good signal for for the entire railway sector. But I believe there are other stocks which are also showing signs of strength. I think, if I'm not wrong, the likes of RVNL, IRFC, RailTel, I think today is showing signs of a breakout, gap up move, and I think if I'm not wrong, it's coming very close towards its 200 moving average, around the 360, 365 levels. So there are a lot many stocks which are coming out of a huge correction. And when you look at this from their 2024 highs, many of these stocks have corrected more than 50%. And that's a very steep correction for these stocks. So there's bound to be a point where these stocks look attractive, momentum would come back again. I think that point has reached for many of the railway names. I would believe Titagarh, RVNL, IRFC. I think these are top 3-4 names which one could be looking out from the entire pack.
Anshul, hi, afternoon. The one standout segment today is the entire new tech or new age tech, as they're called. That space is seeing some profit taking. So be it a delivery, Nykaa, Paytm, I can see most of these names are down 2.5% to 3% apiece. Routine profit taking, you think? Or do you see that perhaps they've had the best behind them now?
Afternoon, Aisha. I think that this is routine profit taking. If you look at this space in general and their performance in a weak market over the last 6 to 8 months, these segments have done exceptionally well. Many of these stocks have more than doubled. Now, it is only natural that there should be some amount of consolidation in this space before the next leg of the rally continues. Now, there is another thing which is quite evident, that this market is rewarding growth, and that growth, if it is believed to be consistent, the rewards are disproportionate. This space has seen some of that reward play out because of promoters who are very driven, passionate for their businesses, the market space, which is quite large and allowing for growth, and that growth translating into translating on the ground, that has gotten reflected in the stock prices over the last few months. It's, in our judgment, a regular profit-taking kind of a situation. Nothing that changes the thesis overall for the long term.
Okay, so that's it. These new age stocks, Kunal, how are these stocks shaping up on the chart? Something like a Paytm, a Nykaa. Nykaa has been quite strong recently, but other than that, what's your take? Is the strength expected to continue?
Yeah, I think that initial correction from 2021 listing highs for these names, there was a 40-50% correction for many of the stocks. But when you look at this post 2022, where these stocks went through a very sharp correction, I think the charts have improved significantly for so many of these names. Eternal, for example, has been one of the few names which has done reasonably well. Stock is almost at those 320, 330 levels, which is closer to the life highs for the stock, still looking very strong. You've seen Paytm, making a very strong comeback. I think 550, 500 was the low for the stock in 2024. And from there, the stock is almost at 1200 plus mark. So it's been an excellent, steady recovery for even a stock like Paytm, PB Fintech, and so many of the other names. I think these stocks have done reasonably well over the last 1 or 2 years, and especially after the first couple of quarters or maybe 1 year of price correction for these names. I would actually believe that there is a much stronger trend which could be evolving for many of the stocks in the space. So I think Paytm could be one of the stocks which I would believe could do reasonably well. Earlier in the previous last couple of years, when the markets used to go into a corrective phase, stocks like Paytm used to be an extremely high beta volatile stock. But this time around, you've seen a change of behavior for these names. The beta has changed for the stock price significantly, and the tendency or the sensitivity with respect to the price correction with respect to market, I think that's also dropped down significantly. So that's a strong name to look at. Even Eternal, I think the stock which is perched almost at those 320, 330 mark at current levels, looks to be an attractive bet.
Shivangi Sharda as well joining in the show right now. Shivangi, hi, afternoon. What are you trading or recommend to trade?
Thank you for having me, Aisha. We've seen that the markets have kind of shown volatile swings within a very small band throughout the day today. But the good part is that it has been holding on to the support levels, and we are seeing buy on decline stance to continue with a good amount of buying seen in selective, stock specific sectors. So first up on my radar, which would be, from the Bajaj twins, they have been witnessing good amount of, long built up over here. Now, Bajaj FinServ is what I'm looking at. This stock has seen quite a lot of action in today's trading session after the consolidation of the last 4 days. The volumes have also added with the price surge, which confirms this, follow-up trend. And it has, surpassed its previous hurdle of 1940 levels, which is also now acting as a base. So recommending a buy here, for Bajaj FinServ with the next target of around about 2100 levels and a stop near 2000 zones.
Okay, Shivangi, hold on to that thought. We'll get back with Kunal. Anshul, great to have you on the show. Good chatting with you as always. We'll take a very quick break. The high to the low of the day has been just very, very narrow. Right now, just mildly higher, 51 odd points or so, 24,944 on the Nifty futures is where we're currently at. The standout performer sectorally clearly today has been IT all the way. Infosys topping the charts with a near about 5% move. Wipro, TechM, HCL Technologies and TCS are all your gainers. And then, of course, there are some dashes of green in a Dr. Reddy's. Adani Ports is holding higher. Nestle, Bajaj Finance, SBI Life are some of the other names which also continue to look good. The breadth of the market as well is pretty much even Steven, while Amber, Titagar, Glenmark are some names which are on the gaining side. On the flip side, Paytm, Sona Comstar, Nykaa, Delivery, Bharat Forge are your rank underperformers. But Narendra Solanki as well joins on the show right now from Anand Rathi Shares and Stock Brokers. Narendra, hi, afternoon. Good to have you on the show. Narendra, clearly it's the buyback cheer across the IT pack today, but fundamentally, would you say things have improved?
Yeah, good afternoon. See, as far as IT is concerned, I think it was very well known that the downside is limited, but I think there were few headwinds regarding the tariffs and what kind of decisions the US government may take. And after the news of Hire Act, which they are trying to pass, that has came, it is very difficult fundamentally to pass that kind of act in a very easy manner because there are a lot of complexities. So I think the market has taken some breather on that part, that it does not look like it's going to pass too soon. Plus, there has been some kind of short covering as well because the downside is limited, and now things are gradually slated to improve in S2, especially if you see this latest quarter result where we have seen BFSI and financial services has been performing, and it is the ERD and manufacturing which has not been performing. And in S2, we are going to see at least some stable numbers from this pack as well. So I think overall, the IT, I think it's a play in a sense that downside is limited and the valuations factor has also become attractive. Most of the stocks and even indices are trading below their, significantly below their 5-year averages right now. Now, coming to the mid cap versus large cap, so we are more positive towards the mid cap IT names in comparison with the large caps.
The take coming in on the IT space, but we also caught up with Rahul Jain, the Director of Research at Dolat Capital earlier in the day, and he discussed the valuations of Infosys as the IT major is mulling buyback worth 9,300 crore rupees. Let's go across and listen in to what he had to say and what his thoughts were on this share buyback.
There are other aspects in terms of what's happening in the US market, even from an economic point of view, and also a lot of uncertainty around how the tariff ecosystem will play out. So some of those factors remains the concern for the valuation in general for all IT companies, including Infosys. So if you ask me, absolute valuation, they are good companies doing better versus the peer. But the concern around some of these uncertainty would also play into the valuation going forward. In terms of the buyback, I think one thing is for sure, once it is approved, there is a definite support that would come from a market buyback if they announce in that format. So that is going to support, but outside of that also, if you see, it's more of a generic trend. It's not something they are doing it out of an attempt to do it in a specific manner. This is something which is already articulated as per their payout policy.
That's the take coming in on IT right now. Shivangi, are you tempted to trade IT or would recommend to do so?
So, of course, we've seen that a lot of action can be seen here today in this entire space, but IT stocks have kind of, been a very lackluster after moving for, one or two couple of sessions. So my take would be, we could little wait and watch over here and wait for it to sustain at these levels because the reversal is, of course, seen, but the confirmation has to be there for a good risk reward in these stocks.
Okay, so that's the take coming in on IT. So that's one of the sectors that's in focus today. Of course, entirely on the back of this Infosys share buyback news. The board is going to be meeting on the 11th of this month to do just that. That stock is up 5% and that trickle-down effect is being seen on the overall IT pack as well. But what's also doing well today is the entire pharma space. And, we have news on Glenmark. There's more news coming in on some of these pharma counters as well. So they are doing very well in today's trade. Kunal, any reading on Glenmark Pharma and Dr. Reddy's on the charts, two stocks that are trading with gains of more than 3% intraday?
Yeah, actually, both of these charts are looking fairly attractive. So Glenmark is coming out of almost like a 4-5 week of a correction, sub the 2000 mark, where the stock had retested the lows. And I think more interestingly, on the daily charts, there was this huge gap which was created for Glenmark Pharma, and that gap filling, I think exercise has been done. The stock, from post that filling of that gap, I think it started to move up higher. So which means we could be looking at 1965 thereabouts is a very strong support territory for the stock on a positional play. And, gradually the stock could start to come back towards at least its previous swing highs, which is around 2300 plus mark for Glenmark Pharma. There's another name which is also coming back into the breakout mode, and that's Biocon, closer to that 365, 366 mark. Yet again, the stock is challenging its 50-day moving average. Over the last few weeks, the stock has tried to show signs of strength, volumes have managed to make a comeback for the stock price. There was a negative news flow, but the stock seems to have shrugged off that negative news and moved up higher, or at least coming back into a breakout mode. So that's another name to look out for. Dr. Reddy also, I think on the daily charts, I was looking at the last few weeks of price pattern. The stock is on the verge of completing a bullish flag kind of a formation on the daily chart. I think 1275 or 1300 approximately is the swing high for this bullish flag formation. So we'll wait out for another maybe a couple of percentage points for the stock to take out this major resistance. And if that happens, we could probably expect that maybe you'll have this stock also getting back into a breakout mode.
Well, the one important piece of news which has really been impacting the market volumes as well, and the next securities appellate tribunal hearing on Jane Street will now be taking place on November 18th. Now, the Securities Appellate Tribunal, or SAT, has ordered SEBI to reply within 3 weeks on the matter. Anurag Joshi, my colleague, is here with more details on the same.
The Securities Appellate Tribunal heard for the first time the hearing on the matter of the July 3rd SEBI order, which has accused a global equity trading firm, Jane Street, of market manipulation. Now, the next SAT hearing on the Jane Street matter will be on November 18. And the SAT has ordered SEBI to reply within 3 weeks on the Jane Street matter. SEBI, in the July 3rd interim order, had accused Jane Street of market manipulation in Indian equity derivatives, particularly in options. SEBI had sought the postponement of the hearing on the Jane Street matter until the SAT hearing is completed. And SEBI said that the SAT hearing, that probe and the final order on the Jane Street issue could be a wider one. And this market regulator said that the probe on the Jane Street case is at a critical juncture, but it is still ongoing. And it will not share any documents that they have relied upon for their July 3rd order. Jane Street had requested the release of all documents with SEBI that were relevant to the case, including the exchanges with the stock exchanges, which led SEBI to come out with the interim order on July 3rd, which had accused Jane Street of market manipulation and had put a fine on Jane Street in the matter.
Right, Anurag, we leave it at that. In fact, that's exactly what I asked the MD and CEO at BSE as well, Sundaraman Ramamurthy, when I chatted with him yesterday about the market participation post the Jane Street case. I wanted to talk about is the very near term here, and participation has declined following, the incidents with Jane Street, and of course tightening of, SEBI F&O regulations as well. In the very near term, say for FY26, what kind of growth numbers do you think the industry is going to clock in?
We don't give forward-looking numbers because we are a listed entity. That's not what we generally give. But one point what I want to make is every regulatory change, as far as BSE is concerned, has not reduced the volume. It has actually improved the quality volumes that are coming to us. Right from the Friday change, which I talked about, from an expiry day product to a weekly product, and from a weekly product to the next week, next to next week. The recent Thursday change, till this point of time, does not appear to have any negative repercussion for BSE in terms of volumes. So I will not be able to say the same thing probably for the entire market as a whole. As far as BSE is concerned, the impact has not been negative. Regulatory changes have only brought in positive things for BSE.
Participation levels are fine.
Yeah, it is fine. Absolutely fine.
Okay, interesting conversation lined up only on ET now, but let's get back to the markets and take a look at two stocks that are doing very well in today's trade on the back of some brokerage action coming in. That's ABFRL and it's recently demerged arm ABLBL. That's Aditya Birla Lifestyle Brands as well. So ABFRL is up about 3%. Morgan Stanley has upgraded the stock to an overweight rating, hiked the target price to 131 rupees per share from 98 earlier. They also believe that there's an opportunity for valuation re-rating, and this stock is an anti-consensus self-help story which could do very well going ahead. So good move coming in on ABFRL, but what's doing even better today is ABLBL, wherein the brokerage house has initiated its coverage with an overweight rating on the stock with a target price of 175 rupees per share. That stock is close to 150 right now, so significant upside from here. They view this company as a defensive discretionary play, and they believe that it can deliver a 10% revenue CAGR over FY25 to 28. So this also looks rather attractive to them, and this stock is up slightly more than 4% as we speak. Narendra, what is your take on some of these discretionary plays amongst the entire broader consumption basket, like fashion, retail? What's your sense on all of that, especially after GST on fashion and footwear, for example, have been slashed?
Yeah, I think it's medium to long-term positive, and the impact would be positive. And we are positively looking forward for H2 to be better than H1 in both discretionary as well as non-discretionary consumption. Especially the volume numbers would be key numbers to watch out for, and we expect that volumes to increase to be significantly higher in H2 for all these space. And in both these stocks, we also have a positive view as post the demerger. I think the growth would be better, and the balance sheet is also strong, and it's now on a pure play execution basis. We have to see how the company executes its growth strategy. But yeah, we also have a positive view on both these stocks.
You as well were tracking ABFRL, right? ABFRL versus Trent, and let me throw in a DMart as well over here. It's not an apple-to-apple comparison, but just the entire retailers bunch. What's looking like a stronger stock?
Yeah, the strongest chart, of course, is DMart. Of course, not a apple-to-apple comparison, but then when you look at the charts, the way the stock has managed to, twice or thrice, there was more than 1,000-point correction for DMart. I think from 5,500 or 5,000 levels, the stock went to 4,200, 300 mark, twice or thrice. But the way the stock has made a comeback every time after the major price corrections, I think that's the solidity which we look out for in terms of charts, and the comeback ability of the stock price after sharp phases of correction, even if it's an extreme amount of news flow which causes the correction to the stock prices. ABFRL, on the other hand, the stock post this demerger, I think, has gone through a different price trends altogether. I was looking at the recent charts. The stock closer to that 90-odd mark has been more or less trading into a range. But then within this range, there have been a heightened amount of volatility for the stock price. We may look at a minor uptick into the stock price over the near term, just based on the fact that there's been good volume which has made a comeback into the stock price. So maybe closer to 9,500 odd levels is where you can expect the target for the stock.
Okay, so that's a take on ABFRL. But Kunal, while we're talking about stocks that are, or charts that are looking strong, if you take a look at the all-time high list today, you have all three names in this list from the auto pack: Eicher, Maruti, M&M. Which of these now also, it seems like it could continue to be a stronger chart because all of them are at fresh highs?
Yeah, we were discussing this, that it's difficult to choose one or two stocks because, you'll have new additions. I'm actually believing that maybe the likes of TVS Motors, Escorts, I think these two stocks should also try and join the club. There would be few underperformers which could be there from the pack, which I would still believe that could be underperformers because the margin of movement for these stocks required could be significantly higher. That could be Tata Motors to a larger extent, and maybe to a larger extent even Bajaj Auto, which could take a lot of time to try and make that come back to that 12,700 plus mark, which was the all-time high for Bajaj Auto. But then I think gradually these stocks would also try and play a catch-up. So it all depends that the sectors have already defined leaders in the entire auto pack. You've seen Eicher Motors, Maruti, I think, being one of the top players or the top movers in the last 2-3 months. M&M, when you look at this comparatively over the last 2-3 years, the stock has done exceptionally well from that 750 breakout point to now 3,500 plus mark. The stock has done exceptionally well over a longish term time frame. But then there are new additions which have happened for the auto stocks. Ashok Leyland is the other stock. We were discussing, recommended this yesterday also. I think in 130.35, the stock has already made a new high for itself. So I think there are a set of stocks which have done reasonably well. They would continue to look very strong on the charts. And it gets difficult for traders to enter into the stock fresh at these levels, because when you've already seen a 30% or a 20% rally into the stock price, it becomes very difficult to try and have a strong position size and then enter into these names. But that's where I would believe that the markets would continue to charge premium for these stocks.
Okay, that's the take coming in on the auto pack right now. But just looking at some of the movers today, and while sure autos has really been one of the best performers, since last month actually, but IT definitely is making a little bit of a comeback. Let's see how sustainable this move is. You've got a Dr. Reddy's, which is looking good. There's Glenmark as well, which is making a dash. And then on the flip side, there is definitely profit taking on the new age tech names, be it an Eternal, which is down 1.25%, Nykaa, Paytm, Delivery, all of them seeing some profit taking. L&T, SBI, Reliance, HDFC, Axis Bank, nothing really happening there other than just a fair amount of softness. And IndusInd Bank actually within the private banking names is your rank underperformer. It's down about almost 0.6%. Shivangi, analyze the entire private banking piece for us, and let me throw in SBI as well in there, the large caps largely from within the banking pack. And where is it that you see leadership now?
If you talk about the Bank Nifty index, it has got stuck within a very consolidated band from the last 4 trading sessions, and we've seen that there has been very small pockets where the buying interest has been emerging in the entire banking and NBFC per se. But of course, some of the NBFC stocks are looking more positive at this moment, and some of the digital, wallet companies are also looking good. But if we have to talk about the heavyweights, I believe there is ICICI Bank, which has been consolidating, which looks like a stock which is getting ready for a good reversal. HDFC, of course, we've seen that from the last 4 sessions, the supports have been shifting higher, but there has been call writers which have kind of made the upside sticky. So we are, as of now, wait and watch on the HDFC Bank. But if you look at the SBI, talking from the smaller banking and the PSU banking names as well, these are looking quite attractive at these levels, and they've made a good base here with good amount of open interest activity seen here. So definitely PSU space is one stock which can be kept on radar for the next few sessions. But of course, Bank Nifty is in a little bit of a underperforming nature and a lackluster move. So we'll watch out and we'll wait for this index to decisively cross and hold above 54,500 for the next fresh leg of rally to continue in all these stocks.
Coming in on the entire financial and banking space, Shivangi, Narendra as well as Kunal, thanks so much for joining us on the show. It's time to start winding down for the day, and I'm going to hand it over to my colleague Ashesha, who's joining by with a market wrap and the kind of moves we've seen today in today's trade. Ashesha.